Welcome to Investors Insights. This week's topic is shockwave. So guys, we got some good news over the weekend and some bad news. Good news is our economy has been growing for 121 months. So 121 months since the last recession. That's great news. It's good to see. But then we also got some concerning news that China had the slowest growth in 27 years. So we're starting to see the impact of trade war, tariffs severely impact the Chinese economy. The question we have is that going to start coming over to other economies like ours? And so we'll get a good read on that this week with corporate earnings. Trey, talk about that.
Yeah, so this week starts with over 50 of the S&P 500 companies reporting earnings. And this is important because the large companies in the U.S. are not just focused on the U.S. It's that global multinational corporations. So when there's weakness in China, weakness maybe in Europe, you may see that hurting earnings. So while our economy has grown for so long, as Bobby noted, this quarter, the second quarter looking backwards, we're expecting negative earnings growth. So the S&P expectations for a 1.8% year-over-year decline in earnings. Currently, we're estimating that next quarter will have a decline as well. 2 consecutive negative quarters, that looks like an earnings recession. That's something we definitely don't want to see, so we're hoping that companies come out ahead of that and maybe beat expectations. It's a small hurdle, negative 1.8%, but it's a very important hurdle that we get positive, because if you have an earnings recession, last year, for example, earnings grew and the market price fell. So companies got cheaper. That gave us confidence to be in equities for our clients. This year, if the market goes up while earnings fall, that makes the market more expensive. It's a little harder to see a longer-term growth trend without earnings.
Yeah, Adam, China's hurting, but we're still looking good. Every economic report's coming out. Almost every report is looking good. Talk about that.
Yeah, and Trey, to your point of earnings, one thing that's going to help with that is jobs. Last week we talked about jobs number, jobs growth being the best since January. This week we're going to talk about U.S. weekly jobless claims. Now that ends as of the 6th. It was at a 3-month low, and for those who don't know, that's the number of Americans filing applications for unemployment benefits. So being at a 3-month low, we're starting to see this labor market really strengthen, and hopefully that'll boost our economy. We have Tuesday, retail sales are coming out. That'll give us a better indication of how this job number ties into the earnings and ties into these companies.
Yeah, and actually we talked about China hurting. It's not just China, though. We're starting to see it. The shockwave hit other economies. Talk about that.
That's correct. One that we're looking at as a great sort of poster child for that right now is Germany. I mean, we all know that Germany's just been a juggernaut economy for years, leading the Eurozone over the past few years. Where the Eurozone's been down, they've been up. Now you have to remember, the German economy is export-oriented and it's value-added oriented. It's also very diverse. So when you look at that, their GDP growth over the last 12 months was only 0.7%. That's kind of unheard of for them. And in addition to that, their publicly traded index is called the DAX, D-A-X. If you look at that, 1 in 3 of those companies is either having a profit warning, they're even having job downsizing or some level of restructuring. Now, Germany's a lot like us in that it's still, most of their economy is small to middle market businesses. Collectively, they call that the Mittelstand, that's that group. And they're still doing okay, but these large publics that are subject to a lot of trade and multinational, they are really down. And you just don't see that normally with an economy like theirs.
Yeah, so obviously there's a lot to analyze, and we're analyzing all this information to see if our current strong markets can continue. So yes. A lot to look at. We hope everybody's having a great summer. Give us a call, email us. We love to hear from you. Thanks.